Hi, in this class I'll explain classes of shares. So there are two types of shares: equity shares, we also call them ordinary shares, and preference shares. So first, preference shares. So preference shareholder have a preferential right to dividend, so they'll get dividend before shareholder get any dividend. And preference shareholder also have a preferential right for the repayment of capital at the event of winding up of the company. So equity share holders do not have such rights, so they'll get dividend only after the dividend is paid to the preference shareholder. If there is no profit left, they'll not get any dividend. And in the event of winding up of a company, equity shareholder will get only in the last. If there is no money left after payment of capital to the preference shareholder, they will not get any money at all. So preference share can be redeemable or irredeemable. So redeemable preference shares are preference share which are paid back after a specified period. For example, after 5 years or 10 years or 15 years or 20 years. It could be any number of years. And irredeemable preference share are shares which cannot be redeemed and only will be paid at the time of winding up of a company. Preference share can also be classified as participating and non-participating preference shares. So participating preference shares are shares which participates in the profit of the company. So once generally preference shares have specified or fixed dividend, and participating preference shares will participate in the profit of the company over and above the fixed dividend. And non-participating preference share does not have that right. Then preference share can also be cumulative and non-cumulative. So cumulative preference shares are shares which carry over the dividend to next year. So suppose if there is no sufficient profit to pay the dividend to the preference shareholders, so the dividend will be carried over to next year and the dividend will be paid from the profit of the company next year. So non-cumulative preference share doesn't have that right. So if the profit is not available in a particular year, preference shareholder will not get any dividend. So equity share holders will get dividend only after it's paid to preference shareholder. If there is no profit available, they will not get any dividend. Similarly, for capital, at the time of winding up of a company, equity share will get its capital only in the last after it has been paid to preference shareholder. So equity shareholder don't get their money back before the winding up of the company, but company have an option to buy back the share from the shareholders. So company can decide to pay back the equity shareholder even before, but equity shareholder doesn't have a right to ask from the company to get the money, but they can sell their shares to the other people in the market. Equity share can be classified into two categories with voting rights. So these equity shares have voting rights and with differential right for voting or dividend. So these equity shares have differential voting rights. So they may not have right, or they may have only 50% of or 70% or similar right of the voting. And similarly, if they have differential right for dividend, they may have more dividend compared to other equity shares. Dividend of equity shares is paid only when there is a profit available and the dividend is already paid to preference shareholder. Also, the management and board of director may not decide to pay dividend in a particular year so that they can use the profit for the furtherance of the business. So the dividend vary from year to year for equity shares. It's not fixed. It depends upon the profitability of the company and the decision of the management to distribute the profit of the company.